Well, one reason Apple has been spared from the slump is because it doesn't rely on ads. The decline of other Silicon Valley giants is partly due to crypto ads drying up. The cryptocurrency market was worth an eye-watering $3 trillion just 1 year ago. Crypto's global market cap is now less than $900 billion. Let's discuss this further with crypto market analyst Jessica Walker, who's also Chief Marketing Officer at the fintech company Fluid Finance. Welcome to the program, Jessica. Let's start with the spectacular fall in the crypto market. It's lost around 70% in just the last 12 months. Why have we seen these huge losses?
That's a really good question, and thank you for having me on. I think this has been a really significant week for crypto. We'll discuss a little bit later what we've seen in the market specifically, but it was exactly 1 year ago to the week that we saw Bitcoin at an all-time high of $70,000. And what's interesting about this is typically we do known to see market cycles of Bitcoin in around 4-year cycles based on the Bitcoin halving, and also just generally when it comes to new flows of new money entering the market. Stocks, bonds, and ETFs also haven't been performing particularly well in the past 12 months, but it has been a particular pinch for people that have been following the crypto space, and we'll see the next 12 months as being interesting to hold that as well.
Now, the crypto world has been thrown into turmoil with the near collapse of the world's second biggest crypto exchange, FTX. Now, we know that the equivalent of a bank run was what was behind this run on that particular platform. But do you think that example is proof that perhaps the crypto industry needs more regulation in order to protect its investors?
So regulation is a really important question when we look at the situation that we saw this week with FTX. Essentially, what we saw is that FTX was insolvent to an element based on the fact that they had a sister company, which was called Alameda. Sam Bankman-Fried, who is the CEO of FTX, also had a heavy involvement in Alameda Research. Alameda's balance sheet was $16 billion US, but $8 billion of that was held with FTT, which is FTX's own token. So when people panic sold FTX's own token on FTX exchange, Sam Bankman-Fried actually spoke out and said Alameda Research will come to the rescue and will solve this issue. But actually, CoinDesk reported just a day later the situation when it comes to the holdings of Alameda Research being less than what they say they are, and when the price of the FTX token, FTT, descended to decline because of a panic sell. We saw the CEO of Binance, CZ, tweet out that he was going to sell $500 million worth of tokens. We saw retail investors also flock to the markets to exit from this investment. And what this led to is actually people that were holding the token, seeing the price decline, and Alameda Research looking to bail out FTX, seeing that there was not enough funds and it was causing an insolvency of FTX, halting of withdrawals on the platform. But actually the US version of FTX seemed to continue with people allowing to withdraw their funds. And with the US being a more regulated ecosystem for cryptocurrency platforms, it did show that actually regulation did come to the rescue with the situation of FTX. The space will need to do more to self-regulate itself, but also cryptocurrency holders are going to need to do a lot more just to make sure their funds are safe.
Time and time again, cryptocurrencies are proving to be very volatile and risky assets. You mentioned Bitcoin. It did reach that record high of around $69,000 last November. As we record this, it's sitting at around $17,000. So even Bitcoin, which is seen as one of the more safer bets in the crypto space, is proving to be just as volatile. Why should anyone be putting any amount of money in the crypto space right now?
This is a really good question when it comes to validating cryptocurrencies as an asset class. Is cryptocurrencies as secure and as traditional as what we're used to? Well, from traditional aspects, no, it is a new asset class and it does come with new technologies. If we look at Bitcoin, as you've mentioned as an example, Bitcoin has an element of freedom behind it. So for people that are looking to invest in Bitcoin as opposed to in traditional fiat currencies, it does give you an element of security. It's completely exclusive from economic issues, from economic resilience, and also as opposed to holding your funds in a central bank. If we look at the Russia-Ukraine crisis, for example, and banks closing their doors overnight, we saw in Lebanon people halting withdrawals of their local banks. So Bitcoin does have this freedom element if you hold your funds on a non-custodial exchange. And that's what's really important then. There's a saying in crypto, which is not your keys, not your crypto. So it's really important for you to remove your funds from centralized exchanges, like, for example, FTX, hold them in an own cold storage wallet like a ledger, so you can hold the security of that asset. And this means depending on where you live in the world, whether it's cross-border, you have the ownership of your own funds.
Okay, Jessica Walker from Fluid Finance. We'll have to leave it there, but thank you again for joining us on the program.
Thank you.